The markets have given us an incredible buying opportunity in silver. Silver prices have dropped sharply over the last several days. In fact, earlier this morning, we almost touched $15 an ounce. That's about $3 an ounce below the high that silver traded for in April, and about $2 an ounce lower than the high from last month. In fact, this is the lowest price silver has traded since early 2016. In fact, it's about the same price that silver was trading at in early 2009. And if you recall, at that time, silver began a 2-year rise that saw prices break $50 an ounce. That was a new record high. We finally got back above the level set back in 1980. And of course, since that time, silver prices have fallen. But even at $15 an ounce, we're still about 3 times where we began the decade, when silver prices were about 5 times, or $5 an ounce. So the move from 2009 to 2011 was a tenfold increase. But even though we've given back most of that rise, we've still seen the price of silver outperform the Dow Jones Industrial Average since 2000. But I believe that the price that we're seeing now is an incredible buying opportunity. Now, what is driving the decline in the price of silver? Well, it might surprise you, but I think the real driver is the Japanese yen and the exchange rate between the yen and the dollar. Now, the dollar has been falling recently. In fact, last week, the dollar index hit a 7-month low. But one currency has actually been weaker than the dollar, and that's the Japanese yen. In fact, this morning, the Japanese yen was trading at a 2-month low relative to the US dollar. And obviously, if the dollar is weakening, yet the dollar is strengthening against the yen, then the yen is extremely weak against all those other currencies against which the dollar is falling. And I think one of the drivers for the recent weakness in the Japanese yen is the pickup in global bond yields. Across the world, interest rates have been rising on government bonds, including government bonds in Japan, which are really the lowest yielding long-term bonds in the world. And what happened a couple of evenings ago is the yields in Japan on the 10-year Japanese government bond rose above 0.1%. Now, that may not seem like a lot. I mean, 0.1%. But if you've got as much debt as the government of Japan, it's actually quite expensive. Remember, the Japanese government has issued more government debt, direct government bonds, relative to its GDP than any other country in the world, and therefore it is the most exposed to the cost of rising interest rates, in that it has a much bigger debt that needs to service. Now, what happened is, as bond prices were being put under pressure, the Bank of Japan basically redrew its line in the sand and came out and told the markets that it will buy an unlimited quantity of Japanese government bonds at a yield of 0.11%. And so what that really did is put a floor beneath the Japanese government bond market, with the Bank of Japan willing to print as much yen as necessary to continue to buy these bonds so that the yields would not rise and bond prices would not fall. But of course, the prospect of all this yen printing sent the Japanese yen down. Now, you might think, well, so what? What difference does it make to the price of gold if the Japanese yen goes down, as long as the dollar is falling against other currencies? What's so special about the yen? Well, what's happened over the last few years is there has been a very strong correlation between the exchange rate of the dollar versus the yen and the price of gold. Gold and the yen have been highly correlated. They move together. Now, why is that? I think the reason is that they're both perceived to be safe havens. Obviously, gold has been a safe haven for a long time, and it's obvious why gold is a safe haven. But to a lot of people, it doesn't make any sense. If I tell you that the Japanese yen is a safe haven, I just mentioned that the Japanese government has more government debt relative to GDP than any other country in the world. So why would the currency of a government that has more debt than any other government be considered a safe haven. And it's really more of a risk-on, risk-off type of safe haven status because the yen has been a funding currency. Interest rates in Japan have been so low for so long that people have been using the Japanese yen to finance purchases of other higher yielding assets, not just other higher yielding currencies, but stocks and bonds around the world. And so recently we have seen an increase in global stock prices, and I think this has put downward pressure on the yen because traders have been borrowing more yen so that they can buy more of these appreciating higher yielding assets. It's when stocks are falling in price and traders want to sell those stocks and repay their yen loans that you see the value of the yen rising. So I don't believe that it's the yen that is causing gold to rise and fall. It's just that both gold and the Japanese yen have been dancing to the same beat for quite some time. But what happens is you have these traders that use computer models and they see these correlations and then they begin to trade off of them so that when they see the yen move, they expect a move in gold. So if the yen is moving up, all of a sudden these computer programs will buy gold. And if the yen is moving down, well, then they'll sell gold. Well, what does all this have to do with the price of silver? Well, silver prices obviously are also highly correlated with gold prices, but they are more volatile. And there is thinner trading, which means they are more subject to bigger moves. So what happened the evening that the Japanese government, or rather the JGB, drew that line in the sand and committed to printing all this yen, that sent the price of gold down, but it sent the price of silver tumbling. It almost had a flash crash. We had a 50-cent or so, 60-cent drop in a matter of seconds. There was a bounce back, but then silver continued to trade lower in New York the following day, and it traded lower again on Sunday night. So a lot of technical selling pressure came into the silver market as a result of the weakness in gold that was sparked by the weakness in the Japanese yen. But long term, this relationship between the Japanese yen and the gold will not continue because ultimately the Japanese yen will lose its safe haven status, and that means gold will be the last safe haven standing, and without competition for the Japanese yen, gold will be even stronger, which means silver will be even stronger than gold, because if gold goes up, silver is going to go up even more. Now, even if the Japanese yen manages to hang on to this status a while longer, it's also possible that the JGB will back away from this commitment, and thus we could see a substantial rise in the value of the yen, which would also mean a rise in the price of gold. So I think either way, either the Japanese yen rallies and gold rallies with it, or it keeps falling and it loses its safe haven status. Because remember, if they're really going to print an unlimited quantity of Japanese yen to keep on buying these bonds to artificially suppress yields so that the Bank of Japan does, or so that the government of Japan doesn't have to deal with a fiscal crisis, then eventually we're going to have massive inflation in Japan. They're not going to be worried about deflation. They're going to be dealing with big-time inflation. And big inflation in Japan is bullish for gold, as is rising inflation around the world. That is what is driving global bond yields higher. It is a pickup in inflation that is only just getting started. But again, I think the best way to play this right now is using the price of gold. Is with silver. If you look at the price of silver right now, relative to the price of gold, you can buy almost 80 ounces of silver for 1 ounce of gold. Now, the historic average is about 16. So the fact that you can buy 80 ounces of silver for 1 ounce of gold is an incredible buying opportunity. This is silver on sale. It's one of the greatest silver sales of all time relative to the price of gold. So if you don't own any silver, this is your chance to buy some. If you've bought some silver at higher prices, this is your chance to average down. Now, if you don't have any more cash because you already have your full allocation to metals, and that's in gold, what I would suggest that you do is that you take some of your gold and use that to buy some silver. You can sell gold to us at SchiffGold. We'll buy it back from you and we'll sell you silver. So you can turn some of your gold into silver at what represents a great buying opportunity for silver relative to gold. Now, we at SchiffGold have just organized a great special on junk silver. We've been able to contact one of our suppliers, and we've got a limited quantity, maybe a couple of days worth tops, of junk silver, which we're able to sell at $1.25 over the spot price of silver. Now, you're not going to find junk silver that cheap anywhere else online. Now, what is junk silver? Junk silver is the name that we use to describe circulated U.S. coins, dimes, quarters, and half dollars that were minted prior to 1965. That means it has a mint date of 1964 or earlier. Now, those coins are made of 90% pure silver. So if you have $1,000 worth, which is considered an entire bag of $1,000 face, meaning 1,000 US dollars of coins, that has 715 troy ounces of silver in it. Now, what's great about buying your silver in terms of junk coins is that they're ideal for transactions in the real world. So if we ever have a monetary crisis, hyperinflation, and you actually need to transact in silver, believe me, if we have a runaway inflation, a dollar crisis, and if you want to buy some goods and services, the sellers of those goods and services are not going to want payment in paper currency that's rapidly losing value or has no value, but they will accept payment in junk silver coins. These are still legal tender coins in the United States, and they're very easily to recognize, and people will accept them in exchange. Now, here I have a quarter of a bag. This is $250 face value worth of U.S. Silver quarters. Right? These quarters were minted again before 1965, so 1964 or earlier. I'm holding one of them in my hand right now, and the difference between this quarter, which was minted prior to 1964, and this one here, which is a modern day quarter, is that the old quarter is 90% silver and the new one is over 90% copper. And I'm holding these coins on their edge, and if you can actually see them, when you look at a modern day quarter and you look at it on its edge, it looks goldish. It's a yellow gold color, and that's because of the copper. This coin here is made of copper-clad nickel. There's a little bit of nickel surrounding a bunch of copper. This is 90% silver. So all you see is silver when you look at this coin. This coin is just a counterfeit. It's a fraud. It was designed by the government to look like this coin, but it doesn't. And of course, if you turn it on its edge, you can see the fraud. So this particular quarter, would be ideal for transactions, as are these dimes. Here is another $250 face, a quarter of a bag of silver dimes. And the dime obviously, is probably the most ideal for small purchases. At today's exchange rate, this silver dime has about $1.15 worth of silver in it. So clearly you can use this coin for very small transactions. In fact, if you go back in time, in the 1930s, you could buy a gallon of gasoline for 2 dimes. It was 20 cents a gallon gas, pretty much for the entirety of the 1930s. But if you have a car that was around in the 1930s, if you still own that car, and if you could dig around behind the seat cushion, and if lodged in there you can find 2 dimes, you can find 20 cents, you can still buy a gallon of gasoline for the same price it was at in the 1930s. That's because the silver represents an excellent store of value. Even after today's big price decline, you can still buy about a gallon of gas, because that's about the national average right now, about $2.30 for gas. Of course, back then, you got full serve. Today, you're going to have to pump the gas yourself. And of course, not only that, you're going to have to wash your own windows. You're going to have to check your own tire pressure. You're going to have to check your own oil level. But of course, that's the subject of another video. That has to do with the minimum wage, and I don't really want to get into that. What I do want to get into is this incredible opportunity that we have right now to buy junk silver. You can buy quarters, you can buy dimes. I don't have any of the half dollars with me right now, but you can get those. Generally, when you buy a bag, you'll get a mixture of all the coins. I mean, you can specify what kind you want. I think it actually might be a little bit more if you say, I only want dimes or I only want quarters, but you'll generally get a mixture of coins. But the face value, if you buy a full bag, the face value will always be $1,000, right? If you buy a tenth of a bag, then you're going to have $100 face. These bags that I was just holding up, these are quarter bags. They have $250 face. But the important thing is that right now we are selling this junk silver for just $1.25 over the spot price of silver. That is the best price you're going to find. You got to call. You got to get in on this special while supplies last. Either way, if there is a monetary crisis, this is cheap insurance to have. You can keep it at home and you can use it if you need it. But worst case scenario, or best case scenario rather, even if there isn't a monetary crisis, silver is an excellent long-term store of value and it is on sale right now. So don't wait. Buy it with fiat currency, and if you don't have any fiat currency because all your money is already in gold, then you can take some of your gold and use it to buy some silver, because at 80 ounces of silver for 1 ounce of gold, this is a great time to use some of your gold to buy some silver.